Hello, today we will learn about GST, goods and service tax. First, let me give you some basic idea about GST. It is known as goods and service tax. It is levied at the time of supply at each stage. It is levied or charged on goods and services. It is an indirect tax. It is merging of all indirect taxes levied by central and state government. Below is the diagram showing all the taxes which covered under central and state government. Let's discuss about types of GST. GST is income for government, and this income is segregated by governments in various types of GST. There are two types of GST. Intrastate supply, which is done within the territories of states. Interstate supply, which is done outside the territories of states. There are two types of intrastate supply. One is central GST, which is known as CGST. And other is state GST, which is known as SGST. On the other hand, interstate supply covers integrated GST, which is known as IGST. There is one more type of GST, which is known as UTGST. If the transaction, supply, is related to Union territory, UTGST is applicable in place of SGST.
What is the concept of input tax credit, ITC, under GST?
In this, tax received at the time of sale will be deducted by tax paid at the time of purchase, so, after that, we will receive net amount of tax payable to government. Here, ITC is simply tax paid at the time of purchase, which is adjusted with tax received at the time of sale. Generally, tax paid at the time of purchase is known as input tax, and tax received at the time of sale is known as output tax. Process to claim ITC. Below you can see the table which contains the whole process. There are two types or ways of the process. First, earlier process before 1st February 2019. Second, new process from 1st February 2019. In the earlier process, IGST was first set off from IGST and then set off from CGST and SGST. And CGST was first set off from CGST and then set off from IGST. And SGST was first set off from SGST and then set off from IGST. But in new process, all types of GSTs are first set off from IGST and then set off from their respective tax. Who is liable to pay GST? The persons whose annual turnover exceeds threshold limits are liable to register and pay GST. Following are the threshold limits for registration under Section 22. An earlier limit from 31 March 2019, in normal category states, a person whose annual turnover exceeds Rs 20 lakh is liable to pay tax, and in some special category states, a person whose annual turnover exceeds Rs 10 lakh is liable to pay tax, and in new limits from 1 April 2019, for goods sellers, in normal category states, if the annual turnover exceeds Rs 40 lakh is liable to pay tax, in special category states if the annual turnover exceeds Rs 20 lakh is liable to pay tax, but for service providers, in normal category states if the annual turnover exceeds Rs 20 lakh is liable to pay tax, in special category states if the annual turnover exceeds Rs 10 lakh is liable to pay tax. Below is the list of special category states. If you want to study GST in detail, then go to your Google Play Store and download Arzu app of accountancy.